Hi traders, in our 100k traders challenge video today, we're going to be taking a look at basically the OE based strategies that we've been taking on the 100k traders challenge account, as you can see here, and also our Q1 performance review. In particular, we're going to be exploring actual reward to risk ratio versus expected reward to risk ratio. And also we're going to be taking a look at why did we only select these trades only based on the smart money framework. This and more in this trading video. Hi traders, thank you for joining the Master the Markets team in our 100k traders challenge video today and supporting us in our mission to spread the truth of trading and help you achieve consistent trading performance. It is Stu Narpan here, founder of Master the Markets Elite Trades Conference and the Traders Open Day. Right, traders, so here we are. Now, firstly, let me just go through the first main point what I wanted to show you guys before we take a look at our Q1 performance review over here on the 100k account. Now, what we got actually over here, traders, is firstly, every trade that we are taking on the 100k traders account and publishing it live, currently we are up $5,144.62 in just under 2 months. Okay, now how are we actually doing that? Now, that is all based on the concept of open equity. Now, remember just before, I know some of you might be saying, oh, that's quite a lot of money you guys have made. That's really impressive. Some of you might be saying, that's really a little, I mean, I can do more than that. But before you think of all the money and monetary amounts, let me tell you a few things, right? So the first thing is, all these returns that you're seeing is just based on one strategy, and that is also based on 9 to 10 instruments, right? So of course we can increase it more by doing more instruments or doing more strategies, but at the same time, before we start to think about all of that, we need to always think on, is it sustainable, scalable, reproducible? Because over the 20,000 people that we've come across over the last 14 years that we've been running, people come and tell us, you know what, Tiru, I made so much in this and that, but it's just over maybe 1 month and 2 months. They will come and tell you, they made 20%. But when you tell them to show you a cumulative track record over 3-4 years, there's not really anyone who can really show you that, right? Very few people in the world. So think towards that, towards sustainable, scalable, reproducible. So based on that, let me just go through with you in a nutshell, how are we actually basing the strategies on? They're all based on what we call the open equity concept. And open equity basically means based on open profit. What does that mean? Basically, every time we enter a trade, let's say on this blue line here, we know on a probability basis how much move is left according to our open equity table. But in a nutshell, all it tells you is we keep tracking how much each trade moves to its maximum point in each trade, on fixing its point of entry to the maximum point reached. And we collect it all into this table, and then we take those distances as the target and we base our strategies on that. Okay. Now, to improve our strategy performance, now I'll come to that maybe a bit later on, but this is in a nutshell what is OE based strategies. Okay. Now, that is what we've been talking about when we get invited to Society of Technical Analysis and a Ninja Trader, where we had 25,000 views in less than 2 months when we talk about these concepts. Okay, they're very popular and got invited by IG Index as well. So that is what, in a nutshell, OE-based strategies are. Now, coming into this and looking at our Q1 performance over here, as you can see on this 100K account where we have taken all these trades on, the first thing what I want to tell you, which I've written down here, is, you have to think about in terms of actual reward to risk ratio. Okay, actual reward to risk ratio. Now, what do I mean by that? Okay, now what do I mean is, so for example, on one of the strategies that we do over here on the 100k account is what we call the 20% OE strategy. Now, what does that mean? That means in this table, I go and take a look at the 20% level that it will get to, which all this is in ATR, by the way. So that's about 2.5 ATR. So then I take from the point of entry, let's say if this is the point of entry I'm going to take when my confirmation signal comes in, then I will measure 2.5 ATR from there and place my target. Okay. That's how we've also formulated all our ideas and base our ideas on our channel here at Master the Markets 2010, where you can go and take a look at. Okay. All this taken in real time, no hindsight there. So on the 20% OE, we use the target that 20% of the runners can get to. Okay, that's how we formulate that on. Now, based on that, usually on currencies traders, that is about a 250 pip target as opposed to usually 150 pip stop loss. Okay, so when you think about that, if I bring out my calculator here, actually, in expected, before I get into the trade, that's 250 divided by 150. That is only about 1.66 to 1 reward to risk ratio. Is it not? Yeah. So this is what we mean by expected. Okay. So some people might say, oh, that's not quite really a lot, is it, Tiru? I mean, do you really want to be doing that? Shouldn't you want 3 to 1, But remember, just hold on to this. This is called expected. Okay, it's not real, actual yet, right? Anybody can create any kind of expected. I can anyhow, just pull out some number. I say, okay, I want 1,000 pip target, and then increase my expected reward to risk ratio to 7 to 1, right? But actually, if it does get there, is another question. So hang on to this first. So this is what we call the expected. So this is how usually the 20% OE starts off with, right? So 1.66 to 1 expected. Yes. And on Brent oil, it's pretty much the similar as well. The target is usually for about $1.50 and opposed to about 2 to 2.5 ATR target. So that's on the expected. Now, when you come to the actual, right? When you come and take a look at the actual here, and if you add all that up, now how do I do that? See, all the profits, right? We add them all up together. That's all together about, you see, this two, I just will include that as one because I had to split that into two trades because according to the account over here, and I think we kind of forgot about that, and we had to add another position in. So altogether, if you look at it, there's one position here, second, third, and four. Okay, so four profitable trades. When you add that all up together over here on the 20% OE, that comes up to n divided by 4. So total profit divided by 4. So if I were to do that, just to give you all a diagrammatic representation, 430.54, so on so forth, and then I plus this 607.20, right, is what I got. Yeah, and then I plus that with 1069.68, and then I plus that with 3164. So once I got that number here, hopefully I've done all that correctly, then I divide that by 4. Let me bring that back up again. That comes to 17.95. Okay, that's what I had written down before. This is what we call your average actual profit. Very important, yeah? So it's your actual profit, okay? Actual average profit, right? Divided by the 4 profitable trades. Now, the other thing is, I got to take a look at my loss over here, isn't it? I've got one loss. This was just by mistake, that we put the wrong figures in to come in. So according to this strategy, I only will take this one here. So the actual average profit, as I showed you, was about 1317.95. Beg my pardon. And then actual average loss, right? Actual average loss is this number here, 339.50. Now, so my actual reward to risk ratio, would be 1317.95 divided by 339.50. 50. Is it not, traders? Yeah. So we got 3.88 to 1. Okay, 3.88 to 1. That's my actual. So let's clean all of that up. So in other words, my expected began with 1.66 to 1, and my actual, what happened on the ground, because of my initial stop loss, trading stop loss, and all of that, became 3.88 to 1. Traders, I can't emphasize more enough, actual is what you're really looking for. Okay, that is, as a professional, that's what we look at. So that's one thing I wanted to tell you guys. The OE based strategies, I told you that as well, how we are choosing our targets based on open equity, which you can also refer to the 7 steps to achieve consistent trading performance. What I also want to tell you is, over here, based on this framework that we got the formulas from the quant traders back from the 1960s, I also want to tell you that we do not trade every single dot that you're seeing here, which is a confirmation bar that confirms a swing, a bottom or a top. That's all this framework does. This is a framework. This is not a buy and sell indicator. With this structured framework, you then choose which particular confirmation you want to trade. Okay, so according to this, very important is that we have to select the trades that we want to trade that will get to my 20% OE target. By doing that, traders, my overall total gross profit improves to override the total gross loss to give you a very good net profitable strategy that you can see over here on our Q1 performance over the last 3 months, what we have done, which has given us 5,144.62 profit, which is roughly, if you take a look on a 100K account, it's about 5.14%, okay, which we are 5% more to our going live, okay, and this is all done in real time. All right, so those are the 3 main things. And also, we're taking this selection, also the selection of these trades, we're taking it also based on volume, price, trend, and volume. Now the volume indicator, thanks to the trade guided team headed by CEO of Gavin Holmes, my good friend and really good trader as well. We're doing it also based on the VSA principles of volume and the VSA light indicator, which you can see. So in combination of all of that, we select those trades, and that's what you're seeing over here. Now, in a very quick nutshell, I show you one more account, which is on the 50K account. We're doing a 50% OE strategy. And on that one there, if I show you all the history over here, right? And over there, we are up about, under just 3%. We're up about 2.94%. And over there in this strategy, our win rate is about 46%, right? And over there, we are getting about actual reward to risk expected. We usually start off with about 1 to 1, and actual, when you do the same thing here, total up the profits, divide by the average loss, we are also coming up with 3.52 to 1. Okay, so the actual reward to risk is what you're looking for. This is a 46% reliability strategy. But however, as we take on the trades, it should improve. Usually we'll end up with 64%. We did miss some trades as well, and I will also put that in some of the videos over here, what to do when you see all your trade miss, 3 lessons learned. So we're doing it all in real time, tracking our journey. So I believe that you guys can also follow us, because we believe that that's the best way to learn, isn't it not, traders? When you do it in real time in live trading and see how the professional actually measures his performance. The last thing I want to tell you is, after you got some trades that you missed that you should have taken according to your system versus the cash, also track those curves. So you should always have a system versus cash curve. Okay, we'll talk more about this in the next videos to come. You can also see it in our other stream videos as well. We talked about this. Right, traders, I guess that's pretty much that. In a review, what we have covered is one is the OE based strategies, how we are taking them on the 100K Traders Challenge. The second thing then we also looked at is basically the actual reward to risk ratio as opposed to expected. And finally, number three, we looked at how we are selecting these trades based on price, trend, and volume. Okay. All right, traders, I guess that's pretty much that from me on this particular video. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master. If you want to get notified every time we put a video up, especially on our live trading update videos, hit the subscribe button and turn on the bell notifications icon. This will get the YouTube algos to kick in and for you to join us in our mission to spread the truth of trading further, so that traders like you can benefit from our videos to trade like a master, achieve consistent performance, and change lives.